Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we're covering everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell, so make sure that you're subscribed to the channel and have those notifications turned on so you can stay up to date with all of our latest videos. We have a lot of great information to cover today, including exciting stock market news, this morning's biggest gainers and losers, and notable earnings reports, including Tesla. So let's get into it, starting off with stock market news. U.S. stock futures are in the green so far this morning, with the Dow futures being up 0.07%, S&P 500 futures up 0.12%, and NASDAQ futures up 0.14%. It is possible that as soon as today, President Biden could announce that vaccinated Americans do not have to wear masks outside. That announcement would come as America passes 230 million doses of the vaccine. However, cases in India are still on the rise. In response to those rise of cases in India, biopharmaceutical company Gilead is set to expand the availability of their COVID-19 treatment remdesivir in India. Gilead is providing technical assistance and support for setting up new local manufacturing plants. The company is also donating the active pharmaceutical ingredient API to local facilities to help increase the production of the drug in India. Additionally, the company is donating at least 450,000 vials of Velclary to help Indian patients. Gilead Sciences is 2 days away from their earnings call and currently comes in as a moderate buy with an average upside potential just shy of 19%. Apple has announced a substantial increase to its investments here in the U.S. as the U.S. technology giant intends to spend $430 billion over the next 5 years and add 20,000 new jobs across the U.S. in the process. The company is also planning to open an engineering campus in North Carolina. Apple said that in the past 3 years, the company has significantly exceeded its original goal of investing $350 billion in the U.S., which was set in 2018. The company has now decided to raise its investment by 20% over the next 5 years. Apple intends to spend some of this contribution on 5G technology and silicone engineering across 9 states in the U.S. Their stock currently comes in as a moderate buy with an average upside potential of 12%. Sun Life Financial has reached an agreement to acquire Pinnacle Care in a deal worth $85 million. The transaction is expected to close in mid-2021. Pinnacle Care will join Sun Life as a leading medical intelligence and healthcare navigation provider. The company has 20 years of experience in helping people across initial and secondary medical opinions. The acquisition should expand Sun Life's stop-loss and health unit beyond the traditional model and help improve the spectrum of care experience and outcomes. Sun Life Financial has an earnings call coming up in 8 days and currently comes in as a moderate buy with an average upside potential of 5.2%. Dell Technogloies has a new collaboration with SecureWorks as they unveiled a new subscription-based service for protecting and securing IT environments against cybersecurity threats. The subscription-based managed service will shield the cloud environment against cyber threats while also improving customers' security posture. According to Dell, the service will monitor, investigate, and respond adequately against cyber threats. Dell will assist customers in deploying the security service controls across all data sources. Whenever there is a threat, the security service will investigate and provide recommended actions. It will also offer step-by-step instructions on how to contain and remediate the threats. The Dell Technologies stock does currently come in as a strong buy with an average upside potential of 7.4%. The most recent ratings all came in at a price target of $120 12 days ago for a 19% growth potential. Shares of Ocugen shot up 20% yesterday after they announced a direct offering of 10 million shares to institutional investors focused on healthcare at a purchase price of $10 per share. Ocugen, which is a gene therapy company that aims to cure blindness, is set to close the direct offering on April 27th and expects gross proceeds of $100 million from this offering. The company intends to use the net proceeds for working capital needs, general corporate purposes, and CapEx. Ocugen is 10 days away from their earnings call and currently comes in as a strong buy with an average upside potential of 7.85%. Now let's take a look at this morning's biggest gainers and losers. Starting off with our biggest gainer so far this morning, which is Rice Brand Technologies. Under the ticker RIBT, they're currently up 22.5%. followed by First Choice Bancorp under FCBP, who's up 21%, and Tian Ruxiang Holdings under TIRX, currently up 17%. Switching over to our biggest losers this morning, we start off with Inspire MD. They trade under the ticker NSPR and are currently down over 25%. They're followed by Reviva Pharmaceutical Holdings under RVPH, who's currently down over 17%, but this was following a gain of over 100% yesterday. And Real Networks under RNWK, currently down just shy of 15%. Now let's take a look at some notable earnings reports. Starting off with the highly anticipated Tesla, who reported record net income. Tesla posted non-GAAP net income of more than $1 billion for the first time in its history in this first quarter. The electric car maker reported a 74% year-over-year increase in sales to $10.4 billion, just slightly missing analyst expectations of $10.48 billion. While non-GAAP adjusted diluted earnings per share of 93 cents per share came in ahead of consensus estimates of 75 cents per share. Elon Musk said that we're used to seeing a reduction in demand in the first quarter, and we saw an increase in demand that exceeded the normal seasonal reduction in demand in Q1. So Model 3 became the best-selling midsize premier sedan in the world. Tesla said that it expects to scale up its manufacturing capacity and achieve 50% annual growth in vehicle deliveries over a multi-year horizon. Tesla, of course, is one of the most divided among analysts and currently comes in as a hold based on 11 buys, 8 holds, and 8 sells. You can see our spread of price targets ranges from $1,200 on the high end to $150 on the low end. Taking a look at that detailed list of analyst forecasts from just this last week, our 2 sell ratings come in from Citigroup and JP Morgan with a downside of 78 and 79%, and today we have several buy ratings coming from Piper Sandler, Wedbush, and Oppenheimer, all above $1,000 for a 35 to 62% growth potential. We also heard from General Electric, who posted better than expected first quarter earnings. But they did repeat their full-year profit forecast amid a continued slump in aviation, sending shares lower in the pre-market trading. General Electric's revenue fell 12% to $17.1 billion, reflecting a 28% decline in its aviation unit and a 9% drop in its healthcare unit after selling off part of the business. The company had a quarterly net loss of $2.8 billion, compared with a profit of $6.2 billion a year ago. The results included a $2.9 billion loss from the planned sale of GE Capital's jet leasing business. It had adjusted earnings of 3 cents a share compared with analyst forecasts for a 1 cent profit. The GE stock does currently come in as a moderate buy with an average upside potential of less than 1%. In the after hours today, we have some notable reports coming from Microsoft, Google, Visa, Advanced Micro Devices, and Pinterest. So that is Tuesday's pre-market morning update, getting you up to speed with everything you need to know before the opening bell. If you enjoyed today's video, please hit that thumbs up button and say good morning in the comments down below. Don't forget to download the TipRanks mobile app on your Android or Apple device so you can stay up to date with all the latest analyst ratings on the go. Thank you guys so much for watching, and we will see you back here next time.